So the longer the time one spends in retirement, the harder it becomes to be certain about your financial outcome. Now, in planning for retirement or living in retirement, you have to understand the risks that lie ahead and how they can impact your financial security. Dave Baker is here in Detroit, Michigan. Dave, thanks for joining us. One strategy for managing risk with investments is simply called diversification. What do you see with your clients in your practice?
Boy, man, this is a big topic, risk management. Coming from both the security side and the insurance side, I've seen a lot of different variations of this. Securities guys think they can do it all with, like you said, asset allocation. Insurance only people think they can do it all with guaranteed income. And in my opinion, the truth is you need to be able to pull from all of your resources. And being able to have a good asset allocation is very important. But what the securities people tend to do is they tend to lean on bonds. And I don't know about most people, but I've been in this business for 30 years and bonds are still confusing to me. So what happens is in the securities world, people move over from bonds and they get into bond indexes. Well, if you're going from a bond to a bond index, now you're in equities. I mean, you're subject to ups and downs. So the whole idea of asset allocation at that point, gets thrown out the window. If we use something with a good portfolio with annuities that would replace the bonds, then that becomes something that now we can actually manage that risk much better, gives us more guarantees. The other thing on top of that we need to be aware of is not just stock market risk, but we also have health insurance risk. We have inflation risk. We have longevity risk. So getting somebody just to the retirement deadline is only the beginning. We need to take a look at the long term and address all those different risk categories.
Now, as someone gets closer to retirement, how should their market risk in a portfolio change?
Well, when we're dealing with retirement, most of the people that we run into are on accumulation mode. And so this means that while you're working, you're saving as much as you can. And some people are conservative in the way that they save for dollars, but a lot of people take on a lot more risk than they're even aware of. So they need to have a risk tolerance score done. But what happens is that as you get towards retirement, you should be easing off the gas pedal. It's kind of like coming up to a stop sign, right? So if you're one of these people that you're going like crazy and then you get to, oh my goodness, there's a stop sign, slam on the brakes. That doesn't really work too well with financial planning. So easing into it is what we see, and then kind of taking as much risk off the table as possible, getting towards retirement. But here's where some people make a mistake, is they get too conservative once they get to retirement. So then we run into not stock market risk, but inflation risk. So we need to have a well-balanced portfolio that gets us to retirement so we don't lose right before it's time to retire, but we still need to have growth on the back end so we have money that's going to last and we don't run out of money in retirement.
My guest has been Dave Baker in Detroit, Michigan. This is Retirement News Online.